up? Good morning. Good afternoon. I found a whole bunch of this music. It's all royalty free. I'll show you. It's on Spotify. Let me go full screen here. Turn it back up. This one's pretty cool. Pretty cool. What's up, Aaron? I am well, thank you. Appreciate it. Hope you're well too. Skywalker, what's up? Jack. So see, this whole bloody Spotify channel is supposed to be all royalty free, and it's all instrumental, which is cool. So yeah, I know the music's loud. Yep. I'll pull it back a little. Is that okay? I'm just sampling it. I'm not really like streaming just yet. This one sounds cool. Arabian trap. That could be interesting. This sounds like Age of Empires music. Down tempo lo-fi, yeah, that's my kind of music. Anything with a slow tempo like this is just very relaxing. Whereas fast music is a bit more. See that? That's very fast. Bit of vocal. Any intense Russian raid? Maybe. Soul funk. Yeah, baby. I haven't found anything that I hated yet in here, so there's so much. It just keeps going and going. Oh, there's the end there. Anyway, I'll get back to it. How do I make like a playlist of like all of it? Do I hit that? Yeah, look, that's it. Beautiful. It looks like some of them are repeated. But if, I mean, if it's all royalty free, I should be safe playing it. My original mix there. Alright. Thanks for bearing with me with the Russian rave music. I know I'm way early than usual for streaming. Adjust the volume. Is that volume okay? Or should I reduce the music a touch? How's that? Is that okay? Yeah, I'm watching the levels here. So this is my levels. Mute. Yeah, I guess I just have to make sure my voice like sort of ranges in the yellow and the music stays in the green, like lower in the green, and that should be a nice balance. That's what I try to aim for. Anyway, I'll press on. I've got a little red light. It'll come good. It's just my internet comes slow and then fast, slow and fast. So I'll just hopefully it just maintains a steady pace now that I've got everything set in place. All right, that rhymed. Steady pace now that it's set in place. Crypto face. Ain't no disgrace. Yeah, I've still got a warning sign saying that YouTube is not receiving enough video to maintain smooth streaming. So I'll wait for that to clear up. Hopefully it's not forever. Is everything okay? Like, can you hear? Is it all set? I'm gonna open up the stream on my phone just so I can check that it's working. There's my stream. There it is. It says it's all clear now. Hear me loud and clear? Sweet. Yeah, look, we've got a new bottom to the weekend. You see that got put in just in the last hour or so. If we go down to the 5-minute chart, you can see where that wick touched down to. So that's like a new low for the weekend. We dipped below 22,500, but we're back up on top of that level now. We're gonna see, you know, if much becomes of this trend that we're getting now. We're getting a downtrend, right? We're below this red line. So that's the line that I'm keeping my eye on. I think I can hear myself on my phone now, so that's good. during the sort of time that I'm not speaking, you should be able to hear the music like enough to where it's not overbearing on my voice when I talk. All right, let me change this to array, not just a line, because I want to get it very pinpoint accurate. Now, yesterday I was talking about a little strategy that I want to sort of go back over, and I want to start like just walking through like just whatever coin. Like it can be Bitcoin, it could be Ethereum, it could be any altcoin. I don't really care. I just want to go back on something that has a lot of price history and test it out and see if we can refine it and get it better, get it working better for getting in and out of like positions based on using those indicators. So we're gonna shit test it. We're gonna see if how many times we can stop out. Like I wanna really put it through its paces, this strategy. I know it's not perfect because I've found a couple of times where signals do stop. They do stop out, but that's cool, not a problem. I mean, that's part of trading. It's not going to be 100% strike rate, but you just want to have that edge, and hopefully this method here gives you that edge that you're looking for to be profitable in the long run. Someone asked yesterday about ichimoku and how to trade ichimoku, and that is a very strong trend-based style of trading. It kind of struggles in a chopping, ranging market with low volume, as does every strategy, to be honest. Like, it's very hard to trade in a flat, choppy market with no direction. You'll get signals to go into a position, and because there's no commitment behind that direction, you're gonna stop out pretty quickly. Like, you know, so I think it's better, like, even over the weekend, unless you can see a strong trend, don't trade. Just let it pass. Like that choppy, crappy range, you know, will pass, and there will be a trend eventually that you can pick up on to make it easier. And that way you're not putting yourself at extra risk. You know, you're trying to minimize as much risk as you can when you're trading. Not financial advice, that's my point of view on it. But yeah, ichimoku, very strong strategy for a trend. You don't even have to use the lines on it, you can just use the clouds, which is really cool. Let's just go to something real random. I'm gonna delete all this. I won't go STG. Let's go to some Binance coins because they've got a long history. Bybit's not as long on the history for coins. Let's pick something absolutely weird. Let's just go AXS. I know it's been pumping lately, but let's go somewhere in the past. You know, somewhere just natural that's got no trend real. You know, like nothing too hectic. All right. We'll just go to where it stops, to where it tells us that there's no more candles to read from. You can see it's quite scattered, like, and that's like because it's like low volume, low cap at this point in the chart. All right, all right, so here, let's just go here. Now, what are the rules? Let's see the rules. Now, price below 200 EMA. We've got that here, yeah? We've got pretty much most of this part of the chart. Price is below 200, so we're looking for short entries. Now we want price touching the top of the Bollinger Band. Now I've made a bit of an adjustment to the Bollinger Band since I was talking about it yesterday. I've actually changed the threshold, so the length, I've made it 30. I think default is 14 maybe. I don't know if that's right. Let me check what default is. 14 seems so. What I'm trying to do is like eliminate the noise. So 30 is a pretty chunky band to deal with. Like, so like you're only going to get the extreme moves coming out of the bands. Good to be alive. £8.99. Appreciate that. Thank you so much. And you're most welcome. It's always a pleasure coming on and streaming for you guys. Let me see. Let's find an entry. So we want, going back to the strategy for a short, we want price below 200 and price touching the top of the Bollinger Band with the RSI above 50. So let's go find that. So here, yes, we got price below Bollinger. We've got, we want to see, sorry, price below 200. We want to see price come up and touch. Yep, there we go. Price came up, wicked through the band. So that's two checks. Now, the place that I've found to take position after it does that is when price re-enters the band. So like, this next candle came all the way down here. Now AXS is a bit of an ugly, you can see the candles are like kind of all over the place, and there's like these little like dot candles. But anyway, I'll persevere. Maybe we'll switch to a different chart that is a bit easier to look at. But anyway, 1 minute AXS, there's the signal, and let's say the entry we get in late, just to really shit test this. Now we can sort of see the bands are quite squeezed, so that depicts a market that is ranging and chopping. So it's very tricky to expect anything too huge, but you can still take positions. Just lower your expectations to a 1-to-1 risk to reward ratio. So position taken here, stop loss set at the, in this case, like, you see how this is going up in increments? Because we're down so low on price that it just chops like up like this. Anyway, the idea would be to set your stop above the wick. But now because this is chopping so much, like maybe we'll set it at the wick, because we're just trying to hit a 1-to-1 risk to reward. There's your one. Technically, I would say that that may have hit. I mean, God, this is ugly because it's working in blocks. I don't like that. let me change to a different one. Scratch that. Let's go. What's something that's quite smooth? Let's just try Doge, just for argument's sake. I don't think Doge is blocky like that. It's got a bit more. It's got a bit more give in it. All right, I'm at the start of my candles. All right, now what do we need? Where did my EMA go? Now my 200. Oh, there's my 200. Okay. So price pops up over EMA. Check number one. Price pulls back. Now it can, now look, this is what I've done. I've got it to where I've got a couple of other EMAs turned on. Wait, let me turn them off just for explanation, because then I'll go back to that and talk about the other ones. But I'll turn those off for now, and we'll get rid of the signaling, just to focus on the 200 EMA and the Bollinger Bands. Okay, so price came up on top of the 200, pulled back, but there have been no complete candles closing down underneath the 200. So I think these, although they are a little riskier, like they're still valid, I feel. So, you know, for the majority here, price was above 200. See, these are a little riskier. I'll find cleaner examples, but anyway, we'll say tick for that one. And second tick because we pulled out of the band and then closed back inside. So let's take a long position here. Let's say we're late into the candle, the close. So we're like here. And we did it on, let me zoom in so I can show you the candle we did it on. We did it on this candle here. Now I'm gonna go forward and do this blind, so it's like this, like I'm hunting for positions. All right. So anyway, this is a long, so we're gonna put our stop loss below the previous wick, which is like say here. You can make it a little more, a little less, whatever. You can see we got in. It initially went up into profit, but then it did a bit of drawdown, but we held strong. And we're targeting 2-to-1 prop risk to reward ratio. There we go. And what was the third check? So we're above 200. We dipped outside of the bands. And then my RSI, I've actually got it set to 13. No, I need to set it to 13. Okay, it slightly just changes the sensitivity of the bands, of the line. So now was this below 50 at the time? Yes, it was. So there's your triple threat. There's your golden entry. And then, you know, you take profit where you like. Maybe at 1-to-1 or at 1-to-1 take off 50% and then let the other 50 ride. Now, when you do reach a 1-to-1, move your stop loss up tight to your entry and let the other 50% ride. Because if it catches a trend like it did here, you know, that's a nice amount of profit to catch. And then, you know, you can just follow it. Now, the reason I had those other EMAs on was an exit strategy, like a way to close the price. That's all that was for, just for exits. So I'll turn them back on and just show you what I mean. And we'll get the signals. Okay, so you enter when price gets sucked back up into the Bollinger Bands, and then you exit when price crosses. Now, I think maybe one way to exit would be when price crosses the orange, because if it crosses the blue, it's a bit too sensitive, like it's going to happen too quickly. So you want to give it a chance to breathe a little. So maybe the orange line, so like up here, is where you would close it. So price crossed the orange. In which case, maybe we don't need the blue. We don't need the blue line. We don't need the signaling as either, like that. We'll just go like that. All right, so this is your close profit line, the orange. So you take entry, you ride it. You can take 50% off at 1-to-1 if you want, or 2-to-1, whatever. You know, whatever strategy suits you. But yeah, as long as you got a certain amount riding into profit, like to maybe capture the rest of the trend, then you can get out up here instead of all out here, and that captures you a further, let's see, 0.42%. So not bad, not bad. It beats getting all out at this level, because you're still waiting for the next signal to get in on a long, because you don't want to double trade the same trend. That's another point I'd like to make about this strategy. Don't get into a position twice. Like, don't close it and take profit and then reopen it, because you're just adding like unnecessary risk. Be patient and wait for the next signal. That's what I think. All right, let's go blind. Let me just scroll a bit. All right, we're blind here. Let me zoom in. We're blind, okay. We're below 200, right? We're looking for price to come up and tag the top of the Bollinger. Or like wick out the top side. Is it gonna happen? Almost. Not quite there. Remember, the bands are quite insensitive. There we go. Okay, now entry into a short would be price crossing back below into the bands. So we're waiting for that. And yeah, here we go. We got some. So let's say we enter a short. I don't know what's coming. This could stop out. Now the stop loss in this case is quite tight, because the wick didn't go too high. You know, this might be a case where I've found a stop. But here, we'll see, we'll check. Oh, it's come back down. Yes, okay, there's a profit. That was a 3 to 2.5. I did not know what was coming, and that was a win. That was a winning trade there. Awesome. See what I mean? Like, when price is below the 200 EMA, and it comes up outside the band, but then ducks back below, you know that is going to be a swing back to the median. Now, there is a name for this style of trading, and that is called, I'll type it out, mean reversion. Because basically, mean means average, basically. So this is a slow average, the 200. So that's how we get our trend bias. But this orange line is like a faster moving average, so it's a bit more sensitive to current price action. So when price leaves the top side of that orange line, the theory is that it will want to swing back to the average. Like, that's what price does. It swings up above and below average, above and below average. And you're basically going for this reversion, which means returning to. So you've got average and returning to. So returning to the average, returning to the orange line, right? So now for entry is you want to take a position when price is deviated away from the average, which is up here outside of the bands. That's what the bands are for. Now let's see, if I had the Bollinger Bands set back to, like, I mean, let me just double check what the default for Bollinger Bands is. 20. Okay, it is 20. It's 20. So length 20 is default for Bollinger Bands. I want to see, like, see how that gives you too much activity outside the bands. There's too many candles. We want to filter that out because it's not. I see that as noise. So winding this up to 30 basically eliminates as much noise as possible. Going up a bit higher. Now 30 is fine. You can actually play around with the standard deviation as well. So see how this gets the real extremes. If you go to 3, you're only looking at the real violent pushes where price leaves the bands. So yeah, you see here with a deviation of 3, it's just wicks. It's just wicks that leave the bands. So you know that it is highly unlikely for candles to actually close outside a deviation of 3 from the average. See that? I don't think you can find any. Like, there's some that look like, you know, that's quite an extreme situation there, and that's quite an extreme situation. But this is on the long side. See, look, we're short because we're below the 200. This is what gets you out of trouble. This is what keeps you from getting in trouble with trades, is if you obey the 200 exponential moving average. I'll make it a little bit thicker because, like that, we want to pay attention to the 200 at all times. And we don't want to do trades that violate that rule or that condition. Okay. So let's hunt for a long. Let's ignore the shorts and let's try to find long. So we want price to come up over the 200. Hasn't quite happened yet. We're see how the Bollingers are squeezing right now? That means we're going to get an explosion in price soon. So something's going to happen. It's building momentum, building. There we go. We're starting to get up on top. All right, now look. What we're looking for is a pullback to the bottom of the band. So we need to wait for this expansion to finish of the band, and we want to squeeze. We want to see a squeeze happen to where we start playing with the band again. Didn't quite hit it here. We kind of missed it, didn't we? Yeah, we missed it. You know why? Because the bands are too insensitive. This is a 3 deviation. Let me see what it would be like. I want to go back to 2. Let's make it 2.5. Let's see if that gives us any change. Alright, let's see if that would have hit on a 2.5. It was a touch. Let's go back to 2. See, this is what I mean by tweaking it. You just want to play around with your indicators until it's giving you signals that are going to work for you. There we go, that's better. So that's back to what we were using before, the 2. So price creeps up over the 200 EMA. Here we go, bang. And we want to see it come back to the standard deviation. There we go, there was a wick touch. Let's say we get in on that. I think we've sort of dialed in the settings we like. So let's go, you know, we entered late. So we entered up, like, say, up here. And we want to set our stop below the wick. And we want to target 2 to 1. So there's 2 to 1. Obviously this one hits. It hit on this candle here. You can see where the white line stops. But yeah, that's trading. That's trading the bands. Now you can see the other technique I said for exiting a position is when price crosses back below the orange line. And that would have taken you out of the trade here. So it's kind of like, I don't know, I'm still trying to tweak this strategy to where it doesn't choke you out of like a good profit ride. But yeah, if anyone comes up with any kind of tweak to this, I'm all ears, you know, like I wanna see like if there's any way to adjust this to make it better, you know. So that's yep, that's awesome. Now let me close this EMA cross tool and bring back Ichimoku because I want to get this working with Ichimoku. Now there is a TK cross one that gives you a 200 EMA in it. Here it is. This is the one Serrano told me about, and it's awesome. It's good indicator because it gives you that 200 EMA. Just gotta find it. There's the plot. Okay, so plot means 200 EMA. EMA 200 strat. Now we're going to turn off all the Tenkan-sen, the Kijun-sen, and the Chiku-span. So we're just left with the cloud and the 200 EMA. That's all we need. It's just cloud trading. Now leave all that the same. That's all good. I'm going to save that as my default for Ichimoku. I can always go back and turn them back on if I need them. But anyway, this is like four-way confirmation. Because you've got RSI, you've got Bollinger Bands, you've got the 200 EMA, and now you've got the clouds, the cloud structure. So check it out. What kind of rules are we playing with Ichimoku? We want to take positions when price has to have crossed up over and be above the clouds to go long, and below the clouds when we go short. So it kind of works like a 200 EMA essentially. But for those interested, by the way, I want to show you guys just Ichimoku as well. Just the clouds. You can trade just the clouds, by the way. It can be really good. Let me delete that. Okay, so one way to trade the clouds with the 200 EMA is don't take longs when price is below the 200 EMA. Only take shorts. And wait for price to cross through a cloud before taking a fresh position. So I'm gonna scroll forward to a part of the chart that I don't know, like that I don't recognize or anything like that. Okay, so like here, let's come forward. Let's look for a long. Let's look for a fresh long position. So we know that we've swung below the 200. So there is a chance of, you know, a reversion to prices above the 200. So we want to see price get up over the 200. There we go. A little bit. We want to see. Let's get a bit more commitment on price there. Okay, here we go. There we are. So we're riding above the 200 now. Now what we want to see is the cloud catch up. So we want to see the cloud get above the 200 EMA. There we go. It's happening. And now a way to do this is when price comes back to the cloud, that's like pay attention, there's going to be a long coming up. So like right there, you could get in on the cloud touch because you're above the 200 EMA and the cloud is green. So it's a bit hard to see because like with Ichimoku, it actually predicts the future. It tries to predict the future, or not predict, but forecast the future. So there's another one, there's a dip into the cloud, exiting the cloud. So you actually take position on the exit, not the entry to the cloud. You take it on the exit because you want that confirmation, kind of like the Bollinger Bands. You don't take a position when price dips out of the band, you wait for it to dip back in to show that it's reverting to the mean, to the average. That's the point. It's basically picking up a swing, or a direction change in the move. So that one was profitable there. This one was profitable. Price entered the cloud. If you could stomach a bit of drawdown, price came back up again eventually and went into, you know, a nice distance for likely to be profit, right? One way to do it is set your stop loss below the cloud. So in this case, this would have been like quite a heavy stop loss that you need to set. Something like that, just at the bottom side of the cloud, like that. Because price will cross back through the cloud at some point, and those are the times you get stopped out. Now you target 2 to 1. That would have been a hit. Even this one may have been a hit. I'll show you. So there was that one, that's a hit. Now we're looking at this dip. Price dip back into the cloud. We want to see when it leaves the cloud. Here, okay. Up here. So let's say we got in there. Stop loss below the cloud. Now this is quite a wide stop. So I guess you want to adjust your expectations to how violent of the stop is. But, you know, this one didn't quite hit a 2. It went to a 1.24. Barely even a 1, really. But yeah, maybe that's something to pay attention to, is you want to be careful of those one-to-ones. Now let's say we did target the 2. Where's the 2? The 2's all the way up here. Price has to come up. I don't know what the future holds for price here. Let's see if it works. Do we get another kick up? No, it stopped out. You can see where it stopped out back here. But it did eventually come up, and it would have tagged up there, but yeah, no, it stopped out. So yeah, I don't know, Ichimoku, there's probably ways to tighten that up and make it a bit better. But yeah, I've just been trying to work out this Bollinger Band RSI strategy. I'll just use the cloud as confirmation that things are heading in the right direction, you know? That the bias is there for me to use. Now let's go to another part. Let's go forward. Okay, let's go here. Now we know price is coming down below. So let's look for price to either cross up over the 200 for a long, or if we get some activity outside the top of the band for a short. Whatever comes first, we'll take the position accordingly. Okay, here we go. Here's some activity to the top of the band. We want to see like a wick or a touch through the top. Now, technically, that was a touch. Was that a touch? Oh, yes, it was. It got above just. But then it closed back in. It's like how fast are you going to be to get into the position next. So it got sucked back in under the Bollinger. Let's take a position short on the, let's say we take it at the open of the next candle. So this time we finally got in at the price we wanted to get in at. Set the stop just beyond the wick, maybe here, and target a 2-to-1. I can't see. There's the ratio up the top there, sorry. 2-to-1 is like that. So that would have hit pretty quickly. 2-to-1 profit. You're only going for a short amount there, 0.14%. But anyway, the idea is that, yeah, when price comes and pulls back to the top of the Bollinger Band, when it's below the 200 EMA, there is a strong probability that it's going to revert back to trend, to the medium, to the mean, right? To the now another profit-taking target to hit in your Bollinger Band is the center line. Let's go now. It's called basis. Let's make it orange. We'll make it like dark orange and maybe a bit thicker. Okay. Maybe this can be our profit-taking line. When price touches or crosses that red line is when you take profit. Let's test that. Let's see if that's gonna work for us. See, that gives us a bit more activity on the percentage. Maybe if we had our stop loss outside or beyond the band, that would have afforded us to put that ratio a bit lower too. Anyway, let's delete that one. Let's look for the next position. So if we touch the top of the band, we know that we're below the 200. So we're looking for a short. Remember, we want to get in on re-entry to the band, not outside the band. We don't want to take our position outside the band. We need to see price re-enter. Okay, so it's exited. That's like a pay attention signal. Pay attention. We want to see if the next candle closes or opens inside the band, because that'll be our signal to get short. Not yet. There. Okay. So I mean, this one did open here, and it probably did dip to begin with, which makes you think, oh, you probably would have taken a position. Maybe that would have been a stop out. Maybe. DOGE Rocket says, Rick, a lot of people have been in Tame's channel looking for you lately. Any chance you'll ever consider joining that community again? I mean, I'm open to it, to be honest. Like, I don't mind. It's totally up to Tame if he wants to let me back in there to talk. But yeah, no hard feelings to anyone in the community. I'm totally peaceful. Like, I don't have any grudges. Everything is water under the bridge for whatever happened in the past. But yeah, like, the more people I can reach out to and talk to, the better, right? The more communities you engage with, the better. Especially for my channel growth. But you know, if people want to hear from me, then sure, yeah, I'm open to whatever, to be honest. Like, I don't care. I know there's like divided opinions on that different people have about others in the community, but you know, that's not me. I'm not divided. Happy to do whatever. I'm all good. All right, let's get back on track. Let's see. And I'll go back and read some of these YouTube comments. I think we had some... Yeah, Grade A Music says, what advice do you have for investors? Investors, I would say don't look at charts that are less than 4 hours. Stick to the daily and above for investors. There you go. That's my advice. Anything below the daily chart is noise. 4 hour, it depends how long you're investing for, but 4 hours not going to give you too much information that's going to be better than the daily. Daily and above is your investing time frames. That's my advice to investors. So yeah, don't let the smaller time frames fool you and trick you out of your money or your positions when you're investing. But hey, the 200 simple moving average on the daily time frame is an investor's dream. If you follow that, I'll show you that. I'll show you that shortly. Okay. All right. Let me read these other ones. Oh, of course we do. A lot of us miss you. Nobody even talks about that old stuff anymore, man. Sorry to stop. Yeah, no, all good, dude. And that's really lovely to hear that people miss me talking. So yeah, that's heartwarming. Thank you. Appreciate it. All right. Let's see. Price. Let's see the Bollinger Bands. We've got inputs 30. Yeah, we're going to keep it at that and see if it keeps working for us. Oops. So price left the band. How can we make this a bit more strict to where we're not going to enter a short when candles could potentially keep riding, you know what I mean? Maybe we wait for a candle close inside the band. So on the close, which would be down here. See how candles closed outside the band? These aren't entries. These are just signals. These are signals saying an entry may be coming up soon. The entry is when a candle closes back inside the band and you take a position at the entry. Now your stop loss in this case is going to be quite tall because it's all the way up here, right? And then you want to target a 2-to-1. I don't know what the future holds for this right now. It could stop out. Let's have a look. Let's see what happens. Oh, it worked out. Okay, cool. That one worked out. That was let's see. Let's drag it to a 2-to-1. Yeah, even a 2-to-1 hit. Beautiful, beautiful, beautiful. Look at that. So from here, what I would do is wait for the next signal. Wait for the next short signal. We're below the 200. Did price ever come back up to the Bollinger Band and then close back below? Yes, it did. Right here. Check it out. This would have stopped you out. I found one finally. Wait, that's the wrong thing. Okay, short. Short. And I'm going to show you... Sorry, I'm keep grabbing the wrong one. Here's a short. Okay. Stop loss just above the wick. Targeting a 2-to-1, which is like there. And check it out. We stopped out on that one. It actually swung back up over the 200 EMA. Now, there is a way to prevent this from happening. And I'll show you. Let's go... Let's make up a new rule. This is another rule. I need to get this back and type it in because we want to see it. We want to see it 24/7. Okay, I'm going to make the text a bit shorter too. So confluence of... This is going to be... I'm going to still call it 3 because the clouds are just like... Then they're going to sort of like restrict you from taking certain positions, I feel. So we'll look at them another time, I think. We'll see if we can get it working with a different setup. But for now, I just want to stick to these 3. The 200 EMA. Okay, so that's the title of the strategy. I'm going to call it the down under strategy. Now, how do I make it anchored? I'm going to anchor that to the screen. Cut that, delete that. Let's go to the text and go anchored text. which just means that the text stays in position when you move the chart around. So let's put it up here or something. Now now what are the other parameters? Okay, we want the long and we want the short. So let's go text size 14. Let's go green text. Let's go conditions for a long entry. Oops, just square brackets. Price. Copy this out a few times here. So there's 3 conditions, remember. Price above 200 EMA. Second condition, price price closing back inside Bollinger Bands. I want to type it out just to be a bit more clear, but just going to make it long. Price closing back inside Bollinger Bands after wicking out of them. Wicking or closing outside of them. And then I'll put in brackets here, entry is when candle closes back inside. Bollinger Bands. And then the other RSI. Now, in most cases, it's going to be below 50 anyway. And there was a tweak that I was going to look at with, because I haven't even gone back over to Bollinger Bands at this stage, but let's just use these parameters for now. Wow, that's a long sentence. Price closing back inside the Bollinger Bands after wicking or closing outside of them. Entry. Wait, this is just like a little note, a footnote. So I'm going to put that down here. After an asterisk. Is that how you say it? Relaxing sounds. Looks like a lot of people are hiding in Doge. It's been up all day while everything else is down. Can't get my head around Bitcoin. It used to do opposite of market. Then from the time it followed the market, now it does what it wants. Can't wrap my head around it. Yeah. I think maybe it's better for us to not look for behavior, because behavior changes with things all the time, you know? There's no, I don't think we should try to box anything into a pattern of behavior, you know what I mean? That maybe that would help you with your confusion there, you know? Because things don't always behave 100% the way that they did in the past, you know. Especially, a lot of people think that Bitcoin and crypto is completely correlated to the S&P 500 with price action, and it's not always the case. Like there's times where it's not. So that's why being fixed in that frame of mind can be harmful to you. So you have to be a little bit more flexible, I think. And then, yeah. Anyway, let me just change this back up to a bit. Yeah, that's cool. All right. Background. I don't want to block out too much of what's going on the chart. This music is real funky and bizarre. Wouldn't be my choice usually, but little baby voice is annoying. Let me just, I'm gonna skip that one. That's annoying, that one. See you later. All right, you like the old music? Yeah, nah, fair enough, fair enough. And we have to change all the wording here. So short, price below. Oh, by the way, we need to make it red too, because we're going short. Price closing back inside Bollinger Bands after wicking or closing outside of them. That still sticks. That's still a condition. RSI above 50. Now there's a entries when candle closes back inside the Bollinger Bands. Yep, that still applies in a short. Yep, that rule still sits. Okay, there's the strategy. Let's see if we can tweak this RSI situation, because we want to make it work better for us. Now, let me lock these and then hide them. And we'll say create a group and call it strategy or down under strategy. Okay, and then we'll just hide it for now. We'll go back to it in a minute. Okay, so chart needs some inflames. Yeah, yeah, that would be cool. I love inflames. Let me change this to a bit different of a color that I'm used to seeing. Yeah, like that. Okay, cool. Save as default. Okay, all right. Now what are we gonna do? We're gonna look at the RSI. And I'm going to just use a regular RSI. We'll get rid of this divergence indicator and just go to your stock standard RSI. Now we're going to change the threshold of the bands. So the upper band, we'll make it 75. And we want the lower band to be 25, like that. And then as far as the length, RSI length, dial it back a bit, because we want to get it actually sensitive to movement. Maybe 10's too tight. 13 is what I saw in a video earlier. And we just want to pay attention to when it wicks outside of those really tight parameters, because then you're capturing just the most violent of moves. There we go, there's one. Let's see, maybe 14, and just bear with me while I play around with this, because I want to tweak it to where it's not going to give too many signals, because then it'll be false signals. We don't want noise. That's what we're trying to eliminate, is noise. Okay, this is cool. I like this. It's going to be rare though with these settings. I'm just trying to make it a bit more strict than just 50 on the RSI. I want to make it like to where shorts need to attain maybe a 60 instead of a 50, or maybe a 65. Let's try a 65. Let's see if that helps. And then maybe a 35. Does that sound alright? Alright, let's see if that works. So we've got a 60. And maybe for the longs we want it, default's 30, but we want to, so we're deviating away from 50. We're going to 10 in the other direction. So maybe 45. The hell out of me. 1 second. So 50's down there. 50's the middle, and we want to deviate from 50 for our shorts to 60, 65. So that's 15 away. So 45 would be backwards. the same distance, right? I think. Is that right? No, 35. Yeah, sorry. 35.65. That's better. All right, let's try that out. We got there. Sorry about that. I'm a little bit slow sometimes. Can you guys still hear me? I'm getting a little warning light saying that my stream is not receiving enough video to be smooth. That's right, I was going to hide the cloud as well. Let me go back into the settings and hide the plot. There we go, because we just want the 200 EMA. All right, now just going to thin this line down as well. Oh, okay, yep. It was, yeah, sorry about that. It's just the stream. Okay, let's test this out. Let's see price. See, this is filtering out a lot of possible signals here. I wanna be able to capture those signals. All right, I know, I've got an idea. This basically makes sure, this idea that I've got gets you into a trend. Actually, let's go EMA, sorry, Bollinger's back to normal. I mean, sorry, RSI band's back to normal. RSI length, that's fine, 14's okay. That's just default RSI, guys. Let me hide the, let's get rid of the values and that, okay. Now, just going back to the old school way that I was teaching yesterday. So let's use 50, 50's still okay. I think we've adjusted the other things enough to where it works like this. All right, this is what the point that I was gonna make earlier about the EMA, the 200 EMA. Take positions or hunt out positions in a fresh trend. So see how price passed back below the 200 EMA for the first time? We know that the trend is fresh. Now, we're in a fresh downtrend. We don't want to be getting in to positions when the trend is stale, like bread. We want fresh bread. To make bread, it needs to be fresh. I mean, yeah, to make money, get in on a fresh trend. Don't get in on a stale trend. It's bad. Bad. All right, fresh trend. I've made the point. That's what makes this position powerful. We wicked, we touched the band. I'm gonna say maybe touches qualify when the bands are this insensitive. Let's just see, what are the band settings? I've got standard deviation of 2, length 30. Let's go back a touch. We know that 20 is the default. Does 25 change much? Yeah, 25's nice. Okay, let's go. Wait, let's road test this as just default, and we'll see if that has an impact. Yeah, okay, cool. That's just default. 20, standard deviation of 2. The style, do whatever you like with the style, you know. Some like to gray the area out just to show that it's in and out of the band. Anyway, okay, enough rambling, let's get on with it. Let's find some examples. Hide the strategy. Okay, fresh trend. Bingo, yes. Maybe I can alter the rules now. With the 200 EMA price. Where's my tool for that? I want to get back into this. There we go. Price. Fresh in capitals. Price fresh. Below 200 EMA. Do you guys understand what that means with the fresh? it means it's just recently crossed. It's fresh. And then that's when you're looking. If it's stale, if it's been, you know, up or over the 200 for too long, it means that the trend is stale and that you're less likely to get a nice entry. Okay, fresh trend, tick. We're below the 200 on a fresh trend. This is cool too, because look, it back tested and got rejected. That's the confirmation that the trend is active. And then you're looking for price to come up and wick or close outside of the top of the band. Check, we got that. Did price close back inside the band? Yes, that's the condition for entry to a short, and it happened right here. Let's say we got in late, we got in like right there, and we want to set our stop loss just above the previous, you know, the candle that wicked outside the band, and then you want to target 2 to 1, and then yeah, obviously this one struck. Now let's do this blind. Let's go forward and go blind into the future from this, you know, time. Let me close that. Now we're full screen. Cool. So we're looking now. We don't want to take any more shorts because you know why? We took one already in this trend. We already did this trend. Now we're looking for an uptrend. So ignore everything. Ignore. See, look, this is getting you out of trouble. See, these are stale signals. They're stale. Stale. They may very well make profit, but they're stale. We want to get the stronger signals. So dancing around the 200, we know that price. Oh, we're in the current time frame. So right now on Doge, we are like gradually starting to close below the 200. So there might be a short entry coming up soon for Doge. Let's change coins because we've run out of candle data. Let's go to something that moves. ENJ. Let's go to Engine. I know that did well like a few days ago. Let's just scroll a random spot on the chart. Let's go back to the start where it gives us no more candles. Oh, this is a lot of candles on the 1 minute. What are we? 18th of January. Wonder if there's a way to like just click it back. Anyway, that's plenty of data. Like that's a lot. You can see it. There we go. All right. Bang. Where's our? Let's wait for our 200 to start printing as well. So we need 200 candles for a 200 EMA to show up. There it is. Okay. Now we want a fresh trend. We know that this would be stale because it looks like, you know, the 200 probably came from here and that trend is all done. We don't want to get on its stale trend. Now price is dancing around the 200. I wouldn't touch this yet. The bands are squeezing. We want to know which side this breaks out. It looks like it's going to break up, maybe. Oh, down. See how it's dancing around, and that's represented by the squeeze as well of the bands when it does that. All right, now we're in a trend. Now we're on a trend. Okay, so we're in a fresh uptrend here. Price finally stabilized and found a direction, and we want to see wait for a pullback. Wait for a pullback. There's one. Okay, it didn't quite come and touch, unfortunately. Is there gonna be one? Or are we just gonna miss out completely? There's one, but it's so stale. Stale in the trend. Okay, how can we make that? How can we improve this? How can we improve this? Price comes down. It's so indecisive, so choppy. Maybe this is just a trend that took off without looking back, so there was no opportunity to get in on the parameters that we have set, you know? Maybe that's just the case. Let's look for another one. So we missed that one. That was nice. Okay, we've got a fresh downtrend here. We've dipped below the 200. No signal though. No Bollinger signal, so it got back to an uptrend again. We want to see a Bollinger touch in the direction. Okay, there we go. Bollinger touched the band, or, you know, I did say that we want to get it closing beyond the band, but in this case it just touched. So maybe, is it because the bands are, no, the bands are set at default. It's not because the bands are too, like, insensitive. That's a better one. See that one, how it wicked out? That's what you want. And then look, a candle closed outside, back inside. So let's set a long here at that candle, like right there. I don't know what's going to happen with price here. So let's set this. Now the stop belongs up here, so let me just move this across so I can set it. And look, it gets stopped out. Damn. That's because, whoa, okay, look at what we avoided. Huge drawdown. So there's a fail. There's an entry that stopped out. Wow, that's dramatic. See, these things can happen without warning, and it completely goes out of the flow of the market. The market was flowing pretty natural, and then bang, that happens. And that's what your stop losses are for. This is what your stop losses are meant for moments like that, so you don't get scammed out of your money, basically. All right, so fresh downtrend. There was no retouch. Here was one. Are we going to class that as fresh? I mean, it's kind of, I guess it's fresh. It's not. We've just come off of like an explosive move, so candle close. Anyway, this one was a good one. You can see it already, how it was good. Candle close back inside the band. Set your stop above the wick, like that. Target 2 to 1. That 0.5% scalp. There was another one, but the trend is kind of stale. Wicked out, closed inside, stop loss just above previous wick, target 2 to 1. That one hit just. This is why 2 to 1 can be helpful instead of like making it a 5 to 1, where it's going to be too unrealistic for a scalp. That would have got you another half percent, 55 and 55.55. On leverage, that's nice. That's not bad. Here's a nice one. Now it's up to you if you want to take that, if you want to agree with that. Like, let's say maybe touches to the EMA reset the trend. Like if it gets rejected, this was a heavy rejection. Look at that candle. So maybe you can justify getting in there, setting the stop above the wick, and then targeting 2 to 1. That would have got you almost 1% off that move there. Not bad. Now, that other element that I was talking about was that EMA cross. I do like that EMA cross strategy, by the way. As just on its own, it's awesome. But we've got RSI Bollinger Bands, a 200 EMA, and so I need that EMA cross tool. There it is. Let's go into the settings. So I've got 9, 26, 45, and 200. I want 200, and we're going to turn the third EMA off because we don't need it. So EMA 3 turned off. We're going to make that yellow because it's our 200. The fast EMA's blue. The slower one's the orange one. Inputs. Okay. Now that we have that, let's hide that Bollinger Band baseline because we don't need it with this indicator now turned on. So maybe let's see if this helps us with where to take profit. This indicator. So let's get a fresh trend. Let's look for an uptrend. We want price convincingly getting up over the 200. I mean, that was it kind of starting. Let's wait a bit longer. Yeah. See, this is why it can help to just give it a moment. Price got up over the 200, but it never signaled. It never did a Bollinger touch above the 200, so that was a no-go. We want a fresh thing. Okay, here's a fresh downtrend, it seems. Is there going to be a point where price comes up and touches the band? No, it gets back above the 200. No, nothing. Too choppy. This is very choppy. We're going to wait for a trend with some commitment behind it. Here we go. Damn. What a crash. See, look, you want the bands, you want the Bollinger Bands to be completely outside as well of the 200. See, this is like it's running into the 200, so it's like it's kind of indecisive. Let me find. Yeah, see how the bands now have like left and got below the 200 as well. That's a better signal. That's showing you that the trend is good. So take it. This would have been a short right there. Re-entry. Ooh, that would be a deep. That'd be a long stop. That would be kind of ugly, actually. 2 to 1 wouldn't make it. Let's see if a 1 for 1 would take profit. Yep, 1 to 1. As a rule, maybe when your stop loss is really far away from your entry, you've got to rein in your target. You've got to pull back your expectations a bit. Maybe go for a 1 to 1. Or, you know, a 0.8 to 1 or something, you know. Just understand that you're catching a fairly bad entry because your stop is so distant. If you tighten up your stop though, it affords you more tolerance to your risk to reward, you know, obviously. Anyway, has this been helping, guys? Following this, me trying to figure this out? Look, here's another entry. Look, price. Let me expand this. Oh, did it touch? Not quite. Damn, because it would have been nice if that just wicked through the bands there. I would have called that an entry for a short. Like here, with the stop loss set just beyond the wick, or what would have been the wick, and then targeting 2 to 1. Yeah, that would have been a hit. Take profit. Yeah, damn. Oh well, that's cool. You just look for the next one. Stale trend. Fresh trend, right? Fresh. It's just come back below the 200. There's a really good one. Look at that. Bollinger Band came below the 200. So we've got this little like bubble that exists now. So that means that the trend went down and pulled the bands down below the 200 as well. So it's a lot more of a stronger signal. So there's your signal, a wick through the band, and you want to take a position on the candle close back inside the band. So in this case, it would have been here. Set your stop loss above the previous wick, which is like right there. Target 2 to 1. Yeah, this definitely hit. This was a very quick trade. But yeah, how dramatic is that? Now this, let's use this other, see this EMA cross that's giving you the green and red dots? Let's close a short when we get a green dot. Let's close a short when we get a green dot. you would have caught all of this. There it is. There's the green dot, which happened on this candle here. So let's say you got in off late. So all the way down here. There. 2.72%. That was a big trade. 6.2 risk to reward. That was a really beautiful, beautiful run there on price. All right, let's look for another setup. We want a fresh. Remember, this trend would be stale, considered stale now. Okay, we're starting to get some activity above the 200. Let's wait for the cloud to get the Bollinger bands to get above the 200 as well. And we need a retouch. Oh, look, we're up and we ran out of data. Ran out of data. Now let's go check out Bitcoin. What do we got? Less than an hour till daily close, which means the DXY should be moving. Yes, the DXY is moving. 101.91. Is that going to change? Yes, it's moving. So we've got DXY going down. Good. We want to see that. I want to see the DXY get below 100. That's why I've got this dashed line here. Let me change it to like a white so we can see it. That's what I'd love to see, the DXY get hammered, make a new low. Is the stock market is this futures moving yet? This is S&P futures. It opens in. Okay, it is open. Okay, it's moving. Yes, it is moving. Since when? When did it start moving? Here? 16 minutes ago? Yeah, 9:01 for me. So. Is that 16 minutes? 15 minutes ago. Cool. Well, it hasn't done anything crazy yet. There's been no crash. There's been no like rip. It's just waiting to take off maybe, or waiting for the actual market to open maybe. Let's see where we came from with the S&P 500. Go out to like the daily. 4 hour. Yeah, okay. Look what we got coming up soon, guys. The federal funds rate. Not long now. Only a few more days. 9 days. Less than 2 weeks. That should be interesting. That'll get the market moving. That'll shake things up. This week's gonna be cool. I like it when the stock market's moving because it gives you some kind of what do you call it? Influence to crypto. Let's go to the 1 minute Bitcoin chart. Let's turn on our tools. Now, are these set up? Let's go that 20. Standard deviation of 2. Actually, See, I'm still working this out. I don't know if I like the 30 or the 20 better. I can't pick. I can't decide. I'm just gonna go with 20 just to keep it default for you guys. $200, let's make that a bit fatter. We're on ENJ. 926 and 200. 926 and 200, good. Bollinger bands, 20 and 2. Bollinger bands, 20 and 2, good. Let's turn off that basis line as well and do a bit of analysis on Bitcoin. So where have we been in the last sort of minutes of the day here? The last hour of the day since 9 o'clock my time, which is right here. So 8 o'clock, the second last hour of the weekend, has been positive. It's moved up. Or 8 o'clock, there's a dip. Okay, hang on a minute. Let me zoom out. Okay, third last, second last, and then we're heading into the last. Let's see how this closes out. Seems to be like staircasing at the moment. Now, what's happening? We're getting a fresh 1 minute trend here. We've popped up above the 200 EMA. Price Bollinger Band is beautifully above the 200. We've got a bubble happening, see? We've got a gap there. We want the band and price to get above or below, depending on what you're looking for. So this is good. Let's do a live demonstration of taking a position. So we kind of want price to dip through the band, don't we? We'll see if we get it. We had our EMA cross. Like if you're using the EMA cross strategy, that would have been an entry there. You would have been in for all that. But let's stick with this Bollinger Band method. Let's see if we can get an entry signal. I don't necessarily like taking positions around the daily close because things tend to shake up a lot and things go out of rhythm, and you want rhythm to trade. A fresh trend is your friend. Yes, 100%. I don't think we will pull back too much. I see Bitcoin hitting 27K at this point. Then see what happens. Yeah, I'm kind of feeling the same. Like I feel like Bitcoin will continue to rally. Now, something to do. On the 1 minute chart on the Bollinger Band, right click on your Bollinger Band, say add alert, and we want to do a condition price, so Bitcoin crossing, or crossing, yeah, crossing's okay. We don't want to cross a value, hang on a minute, we want to use a Bollinger Band alert. Add alert on Bollinger Band. It's just, I think this is how you do it. Yeah, Bollinger Band, sorry, there it is. Crossing Bollinger Band lower, because we're looking for a long, and just go once per bar close. We want to check a sound. Chirpy. Chirpy works. Create. So we'll just wait for the sound, and then that'll be like, hey, pay attention, there's an opportunity coming up. We're not quite there yet. I'd say it's coming up soon though. Yeah, you can add alerts to indicators, Jack. It's really cool. You can see I had one on STG before. I'll close that. Yeah, chirpy alarm. You'll hear it go off. If price crosses and closes below, or wicks through it. You can actually change the parameters of the alert too. You can go when price is crossing, or crossing up, crossing down, greater than, less than, entering channel, exiting channel, inside channel, outside channel, moving up, moving down. Yeah, I like crossing though. Crossing the Bollinger Band lower band. So you've got the basis, which is that center line that I was talking about. And you can change it to upper when you're looking for shorts. But we'll save it as lower. So alarm should go off shortly. We're looking close. Come on, wick through. You know you want to. See how it's giving you the opportunity to get in on a pullback in a supposed uptrend, right? So the idea is that this fresh trend is gonna pull back and then continue on and start staircasing, because that's like the gold standard. That's like the perfect scenario, the perfect storm for this kind of trading. You're trying to catch a trend, you know? I want to do something interesting next though. Like after we do this example, I want to look at just one indicator, and that is just an EMA. Strictly. Nothing else. Just one indicator. And we're going to obey it and take positions off it. Very cool stuff. You want to keep it simple with trading? I've got something just for you. All right. Still waiting. We haven't got it yet. Come on down. Don't be shy. Funny if it flash crashed. It's still teasing. It's not quite getting there, huh? I don't want to FOMO. I don't want to like take a position too early. I'm gonna wait for that chirpy to go off and then for price to close back inside the band. Just enjoy the music for now and wait for this pullback. I mean, this trend is starting to get stale too. And this is why this next strategy might help you with that. The problem with this next strategy is that it can get choppy and there can be a lot of bad entries, but I just want to see if it works. Just want to see. And I've got to decide whether an SMA or an EMA is better for this strategy that I'm going to talk about. Waiting. Check it out. Our highs are getting lower, so that's good. We're heading in the direction we want to. We're pulling back. We're trying to get this to pull back just enough to where it's going to touch the Bollinger. It came so close. How disappointing. So close. Do you guys want me to keep following Bitcoin on the 1 minute like this, looking for an entry, or would you prefer me to go and show you that strategy, that simple strategy? Let me know. So just type follow Bitcoin if you want me to follow Bitcoin, or type strat if you want me to show you the strategy. Maybe I'll let me cast a poll real quick. What do you want to do? Follow BTC 1 minute. Or show new strat. So new strategy. There we go. Okay. Poll. Cast your vote. What do you want to do? Okay, we've got 1 vote so far. Someone just wants to follow the BTC 1 minute. 2 people want to keep following BTC. Okay, cool. We'll do that. Let's get a few more people voting. We've got 4 votes out of 19 people, 5 votes. Ooh, you know what? Let's do both. Let's go. Let's split the screen up. Let's keep Bitcoin on here. So we're following the Bitcoin 1 minute on this screen. And I'm going to show you that strategy on this other window. Okay. Let's pick a different crypto. Carver? Nah, it's disgusting. IOTA? I want candles that look normal. INJ, okay. What does Matic look like? Does Matic look... No, Matic looks cool. Let's use Matic. Okay. Okay, EMA strategy. Let's have a look. We're keeping our eye on the Bitcoin 1 minute. I'm just going to shift this over while I'm explaining this strategy. Turn off that toolbar. Ooh, it looks like it's coming down. That's cool. All right. Let's turn off the EMA cross. Actually, let's close that. We don't need the Bollinger Bands, so I'll just hide them. We don't need the RSI. We only need one indicator, and that is a moving average. Let's try it with a simple moving average first, and then after that we'll try an exponential moving average. So simple moving average, which is just this moving average. It's a built-in, as you all know. Now let's make it yellow. I like to have my lines bright and easy to see. Inputs to, let's go for a 200. So this is a 200 simple moving average. Now the rules. Go long when price closes above the 200 simple moving average. Go short when price closes below the 200 simple moving average. Simples. Let's just randomly scroll back. Let's go back. Random. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Bingo. Okay. I don't know what that line is. Let's delete it. Here we go. Look. Price. Now this is a good example. Price closes above the 200 simple moving average. That means pay attention. It does not mean get in. It means pay attention. We want to see a consecutive candle close outside like this one, see? And we want to set our stop at the 200. So that was invalid. This one is valid though, but it didn't work out. It actually stopped out. So this is like the drawback of this strategy, but it's simple. It's nice and simple. So we want to enter on the candle closing outside, or on top of, for a long, and we want to set our stop loss at the EMA, or at the moving average, like that, or a bit below it. Like you don't want to, because you can get touches that provide support, and you don't want to. Anyway, the point is you don't want to experience too much drawdown, because if it keeps going down, you'll get stuck. So it's better to hold, to stop out and look for the next opportunity in this strategy. So let's do it like this. We want a clean break. That's what we're looking for, a clean break. So that stopped. And by the way, the take profit, we'll figure that out later. We just want to get an entry. Okay, a short happens straight afterwards because we dipped back below. Price closed below. We started getting, okay, there's a candle closed below. Let's set the stop to, I don't know what the rule is. Let's make it to the top of the candle you got in on, just beyond the top, and target. See how it puts you in a trend? It puts you on a move. Winner, winner, chicken dinner. Here's another one. Now this one has a wick back, so you gotta be careful. Gotta be careful. You don't want to choke the trade out. You want to get in and like. This is tricky because it would have stopped you out using this strategy, but then it takes off. Like then it does go. But then there's this really violent pullback. So maybe, I don't know, this is hard. This one's hard. Sounds like Michael Jackson. Okay, let's just call that a stop out and we missed out. Just, let's give the benefit of the doubt to the rules of the strategy. What did we say? Get in on the candle that closes out like beyond. So here. It closed here. And set your stop loss at its extreme of the previous candle maybe. So like there. So yeah, obviously this stopped out because of that wick. That pullback wick. That's a little scam wick, man. That's a little liquidity grab before the move. So that was a loss. That two stop, one stop out, one profit, one stop out again. So that's two stops, one profit. Let's keep going. Let's find a fresh trend. We're waiting a bit of time here. See, there's so many opportunities that we missed here. Here we go. Okay, cool. This looks like a winner. Finally. All right. Crossed, entered on the candle that closed below, set a stop at the previous high of the previous wick, so like there. And then we'll deal with take profit later, but let it ride, let the trend ride, and there will be a situation that you can use that tells you when to get out. Oh, this is a beautiful one. Look at this. These are the ones you want to catch. When it crosses the 200 and doesn't look back, it doesn't wiggle back, it doesn't scam you out. Look at that one, beautiful. Capture whatever, you know, however much profit it rides up into. Ooh, 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 look at that. that went up like all the way up here. A 14 risk to reward ratio. Matic only giving you 2% though. Did the trend stay healthy? No, it did collapse. Okay, fresh trend though. Look, break. Stop above the previous candle there. Target. Still have to work out the target, the take profiting. How would you take profit on this? What's a rule? What would be a good way to get out at profit without choking the trade? Look, Bitcoin took off before giving us a signal. Damn it. Frustrating, huh? That happens to me a lot. Like I miss out on a lot of trades because things take off before I'm in, before I enter. That didn't work as a long because the second candle closed back below. Let's say we're long hunting. Only long, please. There's one. Okay. Candle. Let's make a rule. Maybe when candle closes green above for a long, and when candle closes red below for a short. What's up, Honest? How you doing? So, green candle close, awesome. Long position. Long position at the candle close of the first green candle that closed up outside. Stop loss below the previous low. Targeting whatever you want. 2 to 1, 3 to 1, you know, it's up to you. The magic in this strategy is the entry. The taking profit is a bit, you know, who knows where to take profit with it. Maybe do a trailing stop loss, or, you know, move your stop up as price climbs. Let's get another moving average in. That might help. This is a funky song. Let's go EMA. Moving average exponential. And this is our profit taking line. So we'll make it electric green for money. And let's make the length 20. Nah, let's make it tighter. Let's make it 15. Bitcoin's taking off. Maybe 20 is good. Let's try 50. I just want to see. I want to see what's gonna like get you to stay in a trend, if it's gonna trend, you know. Maybe 50's too, yeah, it's too insensitive. You see what I'm trying to do though? I'm trying to get it to a setting that's gonna let us take profit. Anyway, I'm gonna close this. Too much is happening. We'll come back to that strategy, but yeah, at least it's getting you in at a good spot, that strategy. And then you can just take a 1-to-1 or a 2-to-1 risk to reward, whatever you feel is necessary. All right, let's close Matic, like shift it back over here and go full screen with Bitcoin. Reset the chart. Whoop, Bitcoin, we want Bitcoin on the 1 minute. We're below our September high. I'm gonna remove these for a second, because we just want to look at price action. Nice uptrend. And this is like trying to figure out where this next pivot's gonna be. Hopefully up here. It's a bit of an Elliott wave, can you see that? 5-wave structure. Anyway, let's hold it like that, and we'll just wait for the next pivot. Everything is taking off. US futures, what is it doing? DXY, what is it doing? Going down? Good. There we go. Just a bit of context for where the DXY has been. That purple or pink line is the lowest point that it's been this year. So that's our low to beat. We want to get below that. Try and get below that on the DXY. S&P futures market. Now the stock market doesn't open for like another 14 hours or more. So yeah, 15 or 16 hours, something like that. But we've got the futures. We've got the S&P futures. We've also got the NASDAQ futures as well, which is looking similar on these small time frame. You can see they're quite tightly correlated. Let me turn on, I'm gonna add a comparison. So we're on the S&P futures. Let's add in on a new price scale, the NASDAQ futures. So that's the NASDAQ line there, the orange. What color comes to mind when I say the word NASDAQ? For me, it's blue. I don't know why, because it's a tech sector. It's a tech-heavy index. And NASDAQ is the New York Stock Exchange. That's NASDAQ to me. Maybe that light blue. S&P 500 to me is orange. Dow Jones, what color's Dow Jones? Dow Jones feels like red. Let's get the DJI in here too. That's the US 30. That's this one. The Dow is purple? Yeah. What do they call that? It's called like synesthesia, I think. When you see color with music. You see color with music. This is orange, this music. I kind of have... I don't see color, but I can interpret the music as a color. Like, to me, this would be like an orange song for some reason. Subliminally, because it's Indian, maybe? Sounds, it's like a sitar. Okay, there's your Dow Jones, pink. There's your NASDAQ, and then the candles are the S&P 500. So you can see how tightly they move, like fairly correlated, right? Yeah, synesthesia. Yep. You know, 10% of women are tetrachromats and can see colors that other people can't see in the light spectrum. Wow. That men can't see? Or 10% of women. Okay, so other women may not see them too. Yeah, gotcha. Gotcha. That's cool. Sounds like a neon orange, yeah. Ooh. This sounds green, like murky green, because it's like mysterious. It sounds like it wants to become a Britney Spears song. Not quite. It's a bit too slow for a Britney song. Maybe a bit too macho as well. I don't know. Futures pulling back. Japanese hip hop, East trap. Sounds oriental. So when you go out to like the 1 hour, you can see like the variation there. The Dow Jones dip seemed a bit more violent. The Nasdaq was a bit more shallow. The S&P 500 was like right there. Not in between them, more on the side of the Nasdaq. But the Dow Jones, damn, what happened there? Let's go to the daily. You can see the correlation changes a lot. Yeah, I don't know, like for me, Dow Jones is red like that. Nasdaq's blue, and then S&P 500 is either yellow or orange. We can, you know what we can do? Put them on the big, I'm not going to do it, but you can put them on the Bitcoin chart and have all three. So you've got like the Nasdaq, the S&P 500, and the Dow Jones, showing you their correlation. Now, I think there's directional correlation, but definitely not price correlation, of course. Obviously not price correlation. And amplitude, no correlation to amplitude either. Direction only, if that makes sense. Amplitude, Bitcoin is very amped up compared to these ones. These guys aren't as fast as Bitcoin and crypto. Let me go to Bitcoin. I just want to quickly show that as an example. We got, what, 9 minutes left? Let's do it quickly. So we want the Dow Jones, the Nasdaq, and the S&P 500. Colors. Dow Jones red. Nasdaq blue. S&P 500, orange. Jeez, that's messy. Let's go to the daily and hide all of that mess so that we can see what's happening. There we go. Go logarithmic. Actually, no, we won't. Now this shows you. Look how violent crypto crashed compared to the stock market. Bitcoin. Let's go to the weekly time frame. See if log does anything. No, keep it linear. But yeah, see the directional correlation? The amplitude's different between all of them. They move at a different rate, obviously, but yeah, directionally, they're very similar. Let's make Bitcoin a line as well. So Bitcoin's the bright yellow. Can you see that the stock market went up when FTX caused Bitcoin to crash? Look at that. See that? That was opposite day. Opposite day. Yeah. So Bitcoin deviated down, stock market went up. Yeah, this is the weekly. Sorry, Jack. I didn't mean to freak you out with the weekly chart. Ooh, COVID dip. Was that? Where is it? Where's COVID? Here's COVID. Bang. Everything got hammered. I think it's starting from that low. But look at how Bitcoin was sort of like underperforming the stock market recovery. But then I think there's a point where it starts to beat it. It gets above. If we just scroll. Does it? Maybe not. Okay, maybe not. I don't know. This is weird. Maybe like the scaling's off. It's squishing it down so that the highs and the lows match. Yeah, that's what it's doing. See how all the highs met at the same time and all the lows met at the same time? But then everything in between is different. So it's a bit unfair of a comparison. I feel like Bitcoin would have been more like this. Because of how dramatically like different it is to the stock market. Maybe something more like that, maybe. Anyway, let's go back to candles. We're watching the daily close. Let's close these. Go back to 5-minute, turn on all of our price levels and the weekend box. We want key levels as well and resistances. There's no open, low, high or closes on the yearlies. That log falling wedge has been dealt with. We're above that now. This was like a back test. Look at that. For those playing at home, remember, let's just hide this for 1 sec. Just want to quickly show you that log falling wedge. Let's go to the daily, hit reset. This is our logarithmic falling wedge that comes from the all-time high. Came all the way down. Very recently, we got above it and we're now using it as support, seemingly. See? We wicked down to it in the last 4 hours. Touched it. Are we gonna like explode from here? Like, is this now permission to go up because we've back tested? Interesting question. These price levels and key levels to stay nearby each other because they're kind of correlated. Let's turn on the open, low, high, close because I want to see if there's anything coming up soon, and we'll turn off that log falling wedge. Keep that low in the list. Recent TA, I think all that TA has since passed us by. It's no longer in effect. There's our current trend line. Let's put that in the recent TA folder. Unhide. There's my position and liquidation. I'll show you where my position is. It's up there. Liquidation is somewhere south. Let's see where it is. There's 18K, 17, 12, 11. There's 10K. My liquidation is down here. 4,959. Fairly comfortable. Look at all this cluster of events here. 2017 low, 2018 low, 2019 low, 2020 low, 17, 18, 19, 20. They're all in succession, all linear. 2018 close and 2019 open. Yeah, that's in the past. I feel like we've gotten past that sort of paradigm of prices, which is like sub 5K. Sub 5K prices, I think they're a thing of the past. I don't believe we're ever going to go to 5K again for Bitcoin. You know, I may be wrong, but that's my strong feeling. I'm pretty certain that we're never going to go to 5K again. My opinion, not financial advice, but yeah. 10K, now you're starting to get a bit warmer, like in possibility. Still doubtful, 10K, I feel. 14K, now you're talking about more realistic, because you've got a cluster of things happening around 14K. You got the 2017, 2018 close and open. You got the 2019 high, and you've got 14K. Wait, what's that fighting for? 1 second. Something is intersecting with that writing. Let me just switch this off and then back on. Oh, I've got two things depicting the 2019 high. Okay, never mind. I'll just leave it like that. It's all good. I think it's these key levels. Yeah, key levels. Maybe I can delete the blue one. Is the blue one the key level? Yeah. I'm gonna delete it. This music is so weird, but it's all good. It's just instrumental. There's the close. Let me hit reset. We'll see how it closed. Let's go to the daily. There's our weekend candles. 2 dojis. Well, 3 dojis in a row. Friday, Saturday, Sunday for me. Saturday, Sunday. Saturday, Sunday, sorry. Dojis. Yeah, Saturday, Sunday, dojis. Now we can hide these weekend boxes. Last weekend was similar, right? As in like the range, like a $1,000 range. Let's go down to the 5 minute. That's the first candle. Let me just go to the daily and see how that candle closed actually. Turn off all these levels. Interesting day. Sunday. The Sunday candle. Kind of a spinning top. Like it's just a bit of a doji to me. Very similar to this one. See that one there? Very similar. And essentially these are candles of indecision. Oh, Bitcoin. Let's go down to the 1 minute. One minute, turn on EMA cross Bollinger Bands. Let's bring back that RSI. Go to the 1 minute. Okay, now we want to see a close back up inside. Remember how this trend is, it's kind of like borderline stale. But let's just, for argument's sake, take a position on the close of this re-entry and set the stop below the previous wick. So where's this gonna close? 3, 2, 1. We're in there. Okay. Stop loss is here. Let's see what happens. It could stop out for all we know. Let's target 2 to 1. Right there, like this. There. Give this a bit of distance. See what this puppy does. Ooh, we might hit target pretty quickly, maybe. Can you see how price deviates outside the band and then gets sucked back to the medium? That's the idea. That's the idea with this strategy. It's called mean reversion. It might not take profit. It's in profit, but it might not take profit. We'll see. Go. And it's about, wiggle back. At this point, hey, there we go, profit. Okay, cool. Took profit. Now, at 2 to 1, you can either take profit at 50% and let the other 50 ride, because this is now a trend. This is maybe picking up and becoming something. So that's just a little baby scalp. Didn't take long, did it? Less than 3 minutes to make 0.11%, which is a big deal on Bitcoin. It's like that's not a bad. Risking 0.05 to make 0.11. 2 to 1 risk to reward. Man, I'm happy to see that work live in front of our eyes. That's really cool. See how we were patient? We waited for that alert on TradingView to come through. That tweeting, tweet, to let you know. Yeah, momentum is all over the shop. I think Monday candle open is a big deal because you've got the DXY influence and you've also got the futures market influence. Whereas on a Saturday, Sunday, those don't move, like they're closed. So you got no influence from them. So this is good. This might create some volatility for trading today. We'll see. All right, that's that example done. I'm going to delete that and I'm going to hide all of this. And let's just do some price analysis for crypto, for Bitcoin. Key levels, price levels, resistances. Okay, go to like the 1 hour. This is our trend. There is a bit of a regression trend. Can you see it? Like that. Channel coming down. I don't know if that would be classed as a bull flag. Probably not. It seems to have gone for too long. I don't know. Maybe on the 4 hour. Don't know. I don't think that quite qualifies, so we'll just delete it. Let's use linear regression and maybe tighten it up to here. Try and decide, do I want to keep that trend line or do I want to follow a linear regression? Look at the wick though on the 4 hour Bitcoin candle that we closed with. That is buy pressure, if I ever saw buy pressure. See that? Long tail means buy pressure. Long top means sell pressure. Like we had sell pressure here. Here. Buy pressure. They don't always result in what you want it to do, but it's just a little hint, you know. Take a look at the pressure. There's like a cluster of like important key levels. Down there was a cluster. So disregarding our 2023 high and my position, let's like hide that. Try to ignore that 2023 high. Where between the September high and the August high, there shouldn't be too much traffic if we can get back up over things. Break out of that trend line and then look at continuing a trend to reach our August high. Like, I don't see that much traffic between there. If we go back, zoom out and go back on the daily, is there much activity between September high and August high? It was a straight shot on the crash there. That was the Celsius crash. There are a few levels here. There's like this high, these other highs. So yeah, like you could argue that there is like a fair bit of traffic in that cluster there. It's a bit of an order block. GMT minute candle, nice. Let me go to my Bybit list because that's like there's so many alts in that list. GMT 1 minute candle, yeah, nice. I see that. Thanks, Jack. 1.52% on one candle. 3% up from that, like 6 minutes of activity, or like, yeah, 6 minutes, 7 minutes. Very cool. What else is blowing up right now? CeeLo, YGG, RVN, SNX. What's crashing? STG, that ugly crypto that I was trading yesterday. Ooh, crash pattern. See the lower highs, the lower lows, below the 200? Yeah, I wouldn't be. Look at the beauty of this though on the 1 minute. Look at this. Remember, strategy, pop out, close above. Like this was beautiful. Like this was a staircase to heaven. You know, there was a lot of false starts here. Like, let's say you just took like 17 false starts. It was worth it for the ride up. I mean, just check the ride up. Boom, 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 boom. Ding, 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 ding. That's a big ride. That's like, what percentage is that? It goes up to like 48% up. Total is pushing for 1 trillion again. Nice, nice. Here's the problem with that strategy. Look at the choppiness. At or around the 200 on the 1 minute. See that? Chop, chop, chop. You'd be entering and exiting a lot. You could get a bot that does it for you. Set up a bot that takes longs when price closes above the 200 and also takes shorts when price closes below the 200, and then have the stop loss set to like 0.2% or 0.15%. You would get a lot of trades that stop out, but you would get ones that stick, and they stick really well. Like this, look at this beautiful crash for a short. It did not look back. It went, once it started getting candle closes below here, commitment, damn, what a move down that you would have caught following that. Reattempt to get a new trend started? Nah, rejected. You still could have captured that little profit there. Between here and like riding it up to here, that would have easily hit 1-to-1, probably a 2-to-1. I don't even have to draw it out, but I will. Where's my button for a long? So there, stop loss to here, to there. Easily a 2-to-1, surely. Yeah, just. Sorry, not easily, just. Whoa, Bitcoin's crossing back down the 1 minute. Is it still in an uptrend though? Technically, yes. So when this candle closes, remember this is stale. This is now stale, this trend. I wouldn't be taking positions. Wait for a new trend. Stale trend. No sir. No thank you. No risk. If it crosses below, then we can start hunting for a short. You know? That's how I would play this. Looking for a Perth-based person to teach me chart reading. Do you have any recommendations? I don't know anyone in Perth, sorry. If anyone's out there that lives in Perth that is up for teaching chart reading, go for it. You've got a customer. You've got a student. But hello Perth from Brisbane. Welcome to the channel. Yeah, it seems to be working out as a stale trade. Oh, no. I spoke too soon. I was about to chuck an entry on there. But no, I wouldn't touch it. It's stale. It's stale. Bobby Lee says, no worries. Thanks. Been following you for a year. Very informative. Oh, appreciate it. Thanks, Barbie. So you've probably heard me a million times talk about the Discord then, and sharing the Discord link, all that kind of thing. If anyone is interested, to any of the 15 of you listening, if you haven't joined the Discord yet and you would like to, I'll find you a Discord link. I'm hoping that that one that the bot puts out is valid, because sometimes those links go stale and they die and they don't work anymore. But anyway, bed vans in that URL. I'm gonna pin that to the top. I wouldn't mind a bed van. That would be good for traveling around Australia or America in. A van that you can sleep in. Or a bed that you can van in. This reminds me of Quake, or that Doom music video game. Sport rock, it's called. Next. Sorry. I'll be back. I'm gonna go upstairs and make my second coffee for the day. The emojis. I'm back. Solana? Nice. Here's another way to get into a trade, by the way. If you see support at the 200, you can also take a position because you're taking it at equilibrium. You're opening a position at equilibrium. Just set your stop at a recent low or below the 200 in case it pulls back. What do you think Solana will do? Do you think it's gonna rally today? Where's it been in the last couple of days? Ooh, weird. Giant pullback. I don't know if I had my mic on or off. I was just saying, I wonder what Solana will do today. Whether it's gonna rally or not. Now let's add in. I want to try a different indicator. Let's go the EMA, like 4, we want like 4 EMAs. Ooh, 4 EMAs, 4 SMAs. Where's the EMA ribbon? So this is interesting, this indicator told to go long on this candle. It's told to go short on this candle too, so it's... I think there probably have to be a way to tighten this up. I'd be kind of reluctant to take signals off something that's so vague with its, or like not tight enough with its entries. So I'd probably be inclined to take the signals off it, long and short, yeah, and just have the ribbons. The only time I would get in maybe is at a pullback and a test of the ribbon structure. And if it proves to hold, then that's when I would be excited to maybe take a position. Kind of like here, right? See how it pulled back and touched the ribbons? Pulled back, touched the ribbons, proved that it was finding support, take position, ride the move up. This may not even come back to touch the ribbons, we'll see. We know it's a breakout from the 200 so far. There's every chance it could come back down and re-enter the ribbon, of course, and then cross back down through the 200 EMA, but that's the chance you take when you trade. I'm just looking for probability. Anyway, guys, I think I'm going to wrap it up there. I'm going to go hunt for some things to trade, and I will see you tomorrow, roughly similar time, hopefully. If not, I do have things to do tomorrow, so maybe it'll be a late stream or early, depending what I can figure out. But anyway, thanks guys for tuning in, and I'll catch you on the next one. Bye for now.